It's Jim Hiles at First Capital and Go Plan 101. I just got back from Barcelona, so it's a little bit late on the Monday market. But I got great news. Barcelona was a wonderful place. The market was up, so I should go away more often. And by the way, if you get a chance to go to Barcelona, I suggest you do it. It's a nice town. It's on the beach, it's next to the mountains. The food's great, wine's good. People are friendly. They speak English. Euro's fairly reasonable. We got to see some beautiful country and a lot of history. If you get a chance, go. Those of you who've been, you'll know what I'm talking about. Glad to be back, though. Let's go into it. And you can see we had a nice rebound last week. Came in a pretty big way pretty quickly. So kind of what they call an oversold situation. Markets have really kind of slid backwards, but I think they finally hit a point where people thought that they were on sale again. So they decided to start buying. We're kind of getting through a seasonal period here as well. September, October, we talked about being crappy times in the market and the technical term. But we're also seeing now the retailers, the shoppers are spending money. That's been pretty steady. The balance sheet for the consumers is in great shape. So we think there's going to be a pretty good spend as soon as we can get out to spend it. And I think we're starting to see that. With me going to Barcelona is a good example of what I think that what you're going to see happen finally. I mean, the Delta variant basically pushed this reopening trade back at least 6 months. We're also stuck in these supply chain issues, which are going to be impacting even the Christmas shopping. At least a lot of people are saying that. These are opportunities as well, because you're going to have investment opportunities which haven't yet triggered, which we think are still able to do so and make some money on. This would be the cyclical trade and the reopening trade we think is still going to happen. Earnings are coming out now, so 80% of the S&P companies reported third quarter exceeded. We do expect companies to continue to do well with earnings. So as you start looking around and hearing earnings reports, this is a volatile period, but on the other hand, we think they're going to be positive from an earnings standpoint. You'll probably hear over and over again, supply chain, supply chain, supply chain, supply and demand imbalance, inflationary trends. We still tend to think that this is going to be a period of time we're going to wallow through and get to the other side as COVID starts to hopefully continue to decline. We get a real handle on what's going on. We're kind of through the school opening season. Kids are back in school. We're all dealing with it. The second wave is dissipating. The Delta wave is dissipating. So we're hoping to see all these things translate into, all right, I'm going to get back to normal. And I think people do and are getting back to normal in that sense. What they're finding is they can't get the products and services. When you look at the labor market, I mean, there are plenty of jobs out there, and we're trying to get people to take these jobs. And we need more people to work, and we need more people from perhaps other places around the world to come to here and go to work. The other thing we hear a lot of right now is Tesla and Bitcoin. I don't know on either. I mean, who the hell knows what the Bitcoin's going to do for us in the future? We are believers in it from a small speculative portion of the portfolio. It is potentially going to get a boost this week because there's a new ETF coming out. And you're seeing potentially that the SEC might allow what's called futures trading on Bitcoin in the cryptocurrency market. So it is alive. We think there is something to it, and we are now looking into getting into it in a big way. Keep in mind, a lot of the portfolios that you've got probably in your portfolios now already are in this. JP Morgan is in crypto, for example. Most of the big banks are. You'll see most of the big tech companies are doing something in the blockchain arena. So it's not as if you start here and start investing to try to catch up on Bitcoin. A lot of these bigger companies are already sort of doing it. Having said that, we're looking at getting back to kind of those mid-teens on the S&P, going up to 20% again, which is back to where it kind of was. We hope to, kind of exceed the recent all-time highs. EFA, the international marketplace, has not yet found its stride. So we continue to say that this is an opportunity as well. And I think from a volatility standpoint, things are looking pretty good. You can see that the fear and greed is kind of balanced now, which means that people are now starting to take risk in the marketplace, and they take risk in the marketplace. That's money moving in. Prices we should expect from this point to go up. Because they're neutral, it doesn't mean that that's necessarily a bad thing or a good thing in the sense that if you're neutral, that means they're 51% in, maybe 49% not so in. which means there's money on the sideline and maybe looking to get in. We are risk on across the board, which means both long-term and short-term. We are taking risk, particularly in things like U.S. stocks, and we like various kinds of U.S. stocks. We have something called a choice portfolio. The choice portfolio was built around doing something different than the S&P. And what we're trying to do here is take advantage of the places we think are going to be opportunities going forward. Those have not done as well as the S&P year to date. That doesn't necessarily mean that we shouldn't be investing in them now. And we think that's a potential place for outperformance going forward. So check out our choice portfolio if you want to talk more about it. Please give us a call. Good to hear and see and talk to you again. We'll talk to you soon.